Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. And it's a day which is, different. Yesterday we were talking about how you should not go against the trend. The question mark that a lot of people will raise today is that is the trend finally changing? Well, we'll get to know when we get to know. But first, let's look at the pointers and the key things that you should monitor. Remember, it's FN expiry day today. But first, the key news flow. The virus has surged across US and I think in key states and key areas it's shown a very big surge as a result of which the US markets came off. This chart shows you that Florida, Texas, Arizona, California, Oklahoma, multiple areas, the virus has shown some very sharp surge. And interestingly, a lot of people who gotten infected are in the age group of 20 to 44. So it's no longer just the older people. I think as the US economy is opening up and younger people are moving out, they're contracting the virus, and that led people to believe that could the economic opening up be a bit contained and a bit different than otherwise, and as a result of which the US markets came off. I'll get to that in a bit. First, the news flow. So this was the first one. IMF came out with a slew of announcements yesterday. They have projected a deeper global recession on the growing virus threat. India has gotten the biggest GDP downgrade by IMF as the lockdown hurts from a positive number. It's moved on to a negative number. So that is not actually good news when it comes to India. So that's the other factor that you have to keep in mind. And also keep in mind, I think there's this whole new challenge that is now that is cropped up between India and China. And yesterday there were some news reports about how China is pushing back on the LAC in order to push it deeper. So there's increased military presence, and that shouldn't augur well also from sentiment from India and China. However, mind you, yesterday, Europe, US, both the markets were down. You saw Europe closing down sharply, US markets closing down sharply. The futures, as we see, are very flat for the US markets as well. So it was a tick of red across Europe, and Asia, as it is starting off, is not having the best of starts. And you would presume that that would be normal, that you would expect that Asia will not have a good start. So there is a bit of a problem when it comes to the Asian markets. So down for most of the indices, and the SGX Nifty indicates a start which is about 1% lower in trade as well. So there's not good news when it comes to the SGX Nifty either. We'll have a start which is about 1% lower, and we do. And can you pull back? Difficult to say, but we are now certainly respecting the 200 weekly moving average and coming off from there. Well, the trade setup is fragile because the markets certainly are looking fragile. Rhythm has put out a note. Rhythm this time, Morgan Stanley has put out a note that don't not anticipate a corrective move from the levels that we are at. So the markets are looking fragile. Just keep in mind that if you're running a naked short on the market, you're running the Fed risk. If indeed there is some announcement from the US Federal Reserve for supporting the economy, as has happened thrice now in the last 1.5 months, then you never know that there could be a surprise for the market. So keep that in mind. But the move is certainly weak. Now, the Nifty corrected on the pre-expiry day yesterday, and with the F&O turnover jumping to 63% from what it was. So 163% higher was the F&O turnover compared to the day before yesterday. And on a corrective day for this to move up is a bit of a worrying sign. The market-wide position limit is at 30.63. I think that is in line with what expiry weeks generally show. So I think that is not something that you not to worry about or otherwise. But yes, there were some shorts, I reckon, that were piled on yesterday. Some unwinding that was happening of the long positions as well, simply because June has been such an exemplary month that you would expect all of this to happen. Mind you, it is more about the markets today than about individual stocks. Keep in mind, F&O expiry, so many people have made so much profit in the last 1 month. You could probably see some more pullbacks in the session today. Stocks to watch. There are a few that I think you should keep in mind, even though the market is looking weak. And maybe because the market is looking weak, these stocks should be in focus. It was a corrective move yesterday for all of the banking names. ICICI, IndusInd, Axis, even the other ones had some sharp cracks, but these ones have seen some serious profit booking. So do watch out for ICICI, IndusInd, Axis. I dare say ICICI has announced a share sale as well, potential share sale of $3 billion. I think Bloomberg has reported that. And if that were to come through, then there could be some interesting moves for ICICI Bank, if you will. So I think do watch out for all of these names in the session today. Bharti Infratel could well be in focus. It was active yesterday, but they have once again extended the long stop date for the Industar deal to August 31st. The preconditions to the merger not yet completed, according to Bharti Infratel, and they've said that parties retain the right to terminate and withdraw from the arrangement. That was a bit of a interesting announcement that came in. But that notwithstanding, because the stock has seen a bit of a run up, maybe a bit of a pullback could be anticipated, but nothing too dramatic to my mind. I mean, yes, I don't think this news means that the stock will go back to the earlier levels. I could be wrong, but I doubt that this is as big a negative. It's just maybe a pullback move. Again, the markets are soft, so Bharti Infrastructure could have a small pullback move in the session today. There is continued strength in some stocks which have moved up in the last few sessions, the likes of Adani Transmission, Edelweiss, Future Retail. Um, maybe you got to be careful if you're piled on here. I know a lot of retail investors are piled on in these stocks, so you got to be a bit wary of these as well. Mind you, just lastly, watch out for Jubilant Life as a stock. I haven't put it out here in graphics, but Macquarie's put out a very interesting note. They've upped the target for Jubilant Life, so keep that at the keep it at the back of your mind. Last but not the least, what stood out for me was this very interesting thing that happened in US yesterday. There's a poll that was done, and Joe Biden now leads Donald Trump by a wide margin, 50 to 36, 50% to 36%. This was the New York Times Siena College poll. This is a new one, and the 14-point difference in this poll matches the largest margin that Joe Biden has seen this year. So, could US see a change of guard? I mean, it's too early to say any which is. Who are we to predict? Who are the polls to predict as well? But yes, there's certainly some interesting news flow around that. And until November, I think the US presidential election also will be something that will keep people on tenterhooks. So, a new development, I thought it stood out for me, so brought it out for you. But viewers, have a safe day ahead today in terms of your trades. We could have a start which is in the red, and maybe never rule out sharper pullbacks. Just keep in mind one thing that I've said now for the last 1.5 months: naked shorts run the risk of any kind of Fed announcement. So you have to be mindful of that. Thanks so much for tuning in.